Good morning. Welcome to another Gimbal Friday morning. What's going on in your world thing? Let me share our disclaimer with you so you can be fair warned about this place we call planet Earth and how risky it is. I don't know if you knew it or not, but there are 30% of the people who celebrate this season of the year get injured. Be careful out there. The trees aren't the only things getting lit, so you watch yourselves, okay? Doug, how's your Friday going?
It's kicking off pretty good. Started it this morning at the Starbucks down the street and saw an old friend that I hadn't seen in a while. So that was pretty cool. You got to get out of your house every now and then.
Yeah, be careful getting out there during the winter months too. It's going to get slick out there before too many more days.
I kind of hope it does. I like a little adventure out there.
That's awesome. That is awesome. What do you think? Have you all had enough time with this disclaimer? Just know that these thoughts and opinions are those of Gimbal Financial, a registered investment advisor. They are strictly opinions, and we are often right, we're often wrong, but we are never uncertain. Maybe sometimes. Well, what do you want to jump into first, Doug? I got a number of things I can kick off. We can talk about the market first. We can talk about some planning things, whatever you want to go with, we can go with.
Yeah, I can go with a number of things. I always like talking about the stock market. It's one of my favorite subjects. It's the thing about the stock market is sometimes I forget who coined this, but sometimes it's a voting machine, sometimes it's a weighing machine, and this year hasn't been much of a machine to produce money or income, but it's just been it's been difficult, and it's been a good time to refine strategy and have patience. And so that's what I've learned this year is patience with the stock market, and not like patience like I hope it'll come back. I know it's going to come back. I mean, this is a great way to keep track of business and what's going on globally and in America. I believe it's going to come back, but patience in the sense of you really don't have to do much when it's trending like this.
Yeah, there's the idea that I don't know how many potential financial advisors over my career I've talked to about the hurdles of helping people with their money. And one of those is the emotional attachment we have with our clients, and we hate for them to lose money. And so like in this example here, we've got the NASDAQ up on the screen that they were sharing with you. Suppose early in my career over here, I had $1.6 million of clients' money that I've been trusted to manage. I had that back in November a year ago, and I just stayed in, didn't make any, I just said, buy and hold, baby. And here we are today. That 1.6 million is worth just a little over 1 million. And so $600,000 I'd been entrusted to had essentially vaporized. And I call it a team, the clients and I had to figure out how we were going to get back to this level, which mathematically is quite a gymnastic event. And so then that's the first hurdle I tell advisors that want to get into it is, what do you do with that first million or so? And then suppose it was up to 16 million. I'd got more clients and I was up to 16 million, and I wrote that down. I lost or saw vaporize $6 million. And that really challenged me to sleep at night. And suppose somebody got it up to 160 million, and here you are, almost 60 million. And so that's part of the psychology that probably most advisors don't even really talk to their clients about, how it affects them. And I feel like we've really protected not only your capital, but our mental capital to help you during 2022.
And some of the lessons from the past were, hey, buy good companies, buy things that buy from companies that you spend your own money on, and all that stuff makes sense. But in a negative trending market where the trend is going down, it's like you're running with a parachute on at that point in time. And so the patience level comes in and says, until we start to make some highs, and we can record that just like we are right here. Until we start to make some highs, it's just good to have a little bit of money, maybe a little more money on the sidelines.
Well, it is dangerous out there. If you all have questions for us, do call us. Call if you've got friends or family during the holiday that are struggling with their finances. We're happy to chat with them and offer them some input. And I'll just go over quickly kind of the last week since we talked. We connected these tops on the S&P 500. They were bringing you right around. Let me do that again. Drug that up just a smidge when I let go of it. They were bringing you right around the black line, which we've told you is the 200-day moving average,
which looked great.
Yeah, it's trying right here is trying to come out above it, and guess what? It gave it all back, and
look what it did back in the summer months.
Where it hit here.
Yeah, and then it came right down to the 50 being the red line, and that's what we're challenging now.
Yeah, it rallied off of it down here. And we like to see this volatility drop off today. Like, well, goodness gracious, got a herky jerky hand here, but today it's bouncing right off this 50-day, the red line. And in a perfect world, I don't know about you, Doug, I'd like to see it just trade in between these two for a while, and then boom, shoot out over here sometime.
Chill out a little bit.
Yeah, sometime in January, pop out of there. And so that may or may not happen, but we're going to watch daily on your behalf and try to make some wise decisions on how to get the money we've had on the sidelines invested for you. And we're not in a hurry to do that. I forget, is it Patrick Walker that says you've got, if this rally is going to stay, it's going to last more than 6 hours or something like that. We've got time to get back in it and preserve capital and mental capital.
And the only way for the rally to actually happen is you've got to have some new highs.
Yeah,
it's got to get higher than where it is today. And so that's what we're charting and looking at and trying to gauge what is the direction in price. And then we talk about this all the time that I don't think very many people talk about is the volume. And so the volume is on the bottom of this chart. And you can see it tracks that there's a red horizontal line that goes across. And if you're looking at this on your iPhone or iPad, it might be kind of tricky to see, but the red horizontal line going across tracks the average volume over the past 50 days. And we got some selling coming in. And so again, the only way markets get higher is through new highs. So it's just a great time to be patient.
Let me punch in a couple
It may
things.
sound like I'm pessimistic. I hope I'm not coming across that way, because there are so many. Yeah, this will really make me sound pessimistic. But there are so many really neat things happening out in our world, and Keith and I are proud. Well, I don't want to speak for you. I'm a proud first of 1 million subscribers to this new piece of AI technology that's been a lot of fun. And so there's these new technologies that are coming out, and a lot of them we may not even know their names, but they'll eventually be household names. And that's how the market goes up. There's no other place in the world where this stuff happens at this speed. And so we're pretty optimistic for everyone, every investor out there, for the long haul, because there's new innovations happening. But we can wait. We don't have to guess or hope. We can just wait and let them prove themselves.
Yeah, this and what I think happens psychologically in that, Doug, is that during a recession, people are getting laid off. Maybe they get demoralized. There could be a lot of things that go on, but at some point they say, you know what? Maybe I don't want to work for somebody anymore. Maybe I want to create something that's going to bring value. And so a lot of these great companies, great ideas happen and are initiated in times just like this. And so that's where it's kind of weird to think in pessimistic times is when it's fertile ground for optimism and creativity. But I think you'll see that in history if you look backwards and when you look to the future and see where some of these companies came from. They came from difficult times.
And some of those companies, you don't have to be a complete entrepreneur to do it either. And there are several market leaders that have been entrepreneurs where they're working for a big company and and they discovered something within that big company that hasn't really been pushed, and they start pushing it, and next thing you know, that spins off to a new market leader.
Can do it. Absolutely. Well, this chart that I put up here for you has a lot of data on it. And I was really looking at this bottom chart here that shows the 10-day moving average of new highs that are in the blue and new lows that are in the red. And basically, you need the new lows to get lower than the new highs. And so you can see we just haven't had many new highs for a long time. Let's see what this looks like if I change this into 2020 real quick. Yeah, so in 2020, the new highs were consistently above the new lows, but that was the COVID thing. So if we take you back even 1 year from there, you can see that there was a, I remember that would have been 2018. The Christmas season was brutal, and that happened. But then you see the new highs coming back on top, and so we need the new highs to jump up there and start showing some strength.
Type in NASDQ real quick, and you can leave the time periods.
Okay.
And so we were looking at the New York Stock Exchange, and we're going to switch to a different basket of stocks. And this is the same data, but this is on the NASDAQ. And so on the NASDAQ, one things I like about it is these are like a collection of technology and innovators. And this is the one that I look at to see, is anything new happening? And right now, I think it really showcases that the new lows are trumping the new highs. So again, patience.
It is kind of ironic. One of the research people that we subscribe to and help us in our decision grid got out of the NASDAQ completely right here last year. And we started in that same time frame, moving that part of your portfolios to cash. But there's not been real indication from this chart that you need to jump back in those high-tech stocks anytime soon. So that's what's going on out there. We're optimistic. It's a lot easier as investors to be optimistic when you have some money to invest, because if you're already in, you have to make two difficult decisions. You got to pick which company or which fund you're going to get rid of, and then what you're going to go into, and your confidence level probably isn't very high to make an assertive, wise decision. And so for 2022, I'd say that Doug and I have kept our confidence level pretty high and have you in mind as we're making decisions. And so we're optimistic moving into the new year.
I would say this too: if you don't have any money, I guess this would be specific to like if you're in your 20s or maybe 30s, and you don't have any money, now might be a great time just to even like do some pretend trades and say, okay, well, if I did have money, this is how I would handle it. I would, buy 100 shares of XYZ or whatever. That's not a stock, but just maybe even do some paper trades. And that's a great way to learn and start to kind of figure out the psychology of how you want to invest.
And even if you want to amp up the psychology a little bit more with some providers, not us, but some providers, you could buy a share of stock.
It's crazy.
At no cost. Yeah. And you could have the emotions by buying a share of stocks, and not plural stock, a share of a stock. But I was listening to a podcast this morning about one of the great investors that I like. Is they were talking about William O'Neill, who I suppose is a multi-billionaire. I don't know, but he, in a down market like this, to stay in touch with the market, with all that money he had, he would go in and buy 100 shares, which would mean that would be like me dropping a penny out of my pocket. And he would do that just to stay in touch and get the emotions of, is this thing showing some strength, and is this the right one? I thought that was really fascinating to think about him in that manner. Well, some economic things I was looking at today. The Fed raised rates so far this year since March for 425 basis points, which is 4.25% to us laymen. That's
a pretty big leap.
Well, I was to say it makes it the fastest hiking cycle since 1980.
Yeah. And you felt it, like if you're wanting to borrow money to buy something, it's probably altered your decisions, on maybe what you could do or should do. So yeah, it's a huge leap. Interestingly enough, with that leap, some of the home builders are still doing pretty good.
It's really intriguing. I guess the best perspective of what that might feel like to you is my brakes in the cars that I drive are really smooth, and so when I hit them, I can gradually lay on it. But when I get in Connie's car, when I just gradually hit it, it jerks you forward like that. And that's kind of what this kind of applying higher interest rates will do to the economy. It's going to feel a jerk, and I'm not sure that that's all been manifest out there yet. I think borrowing money, you probably feel it. Somebody called me or texted me last week, and they said, "What mortgage company do you recommend, Keith?" And I said, "Why do you ask?" And he said, "The service on my mortgage has been horrible." And I said, "Well, get used to it." And they were frustrated. And I said, "Well, if you financed your house at 3% and you want to fire them because of their poor service, you're going to refinance it at close to 7%.
Yeah.
And are you that angry?" And so at the end of the day, that mortgage company, they know they don't have to improve their service, which is
They might not be able to improve their service.
yeah, which is going to be really sad for those customers. But that's what's going on out there, and it's really quite fascinating. I was looking at some data, and I wanted to tie this back into you and I kind of discovering the world. But I saw some data this week, and I don't want to pat ourselves on the back, but I think we try to stay objective. All through COVID, we would bring you data and point out how we think you might be needing to sort through your decisions. And though that data was kind of contrary to things that were coming out in the news, and yet here today we see some of that data being proven true for what we were saying back then, that things aren't what people are saying.
Did you look at CDC numbers last night?
Well, I was looking at them on something you probably weren't. So this is
No, I probably was.
well, what I was looking at was 2021 had the highest gun-related deaths in U.S. history, over 48,000 gun-related deaths. 2022, right now that number's at 41,000. Okay. So imagine 48,000 deaths, which is a ton. I'm not underestimating that at all.
It's terrible.
But there's this new technology, and it's called, is it OpenAI? Is that what it was called?
Yeah.
Yeah. OpenAI.com, I think, is the website. I'm not endorsing it. I'm just saying, I read in something Doug sent me that it was going to make Google obsolete in 2 years. And I thought, how could it? So
you gave it a whirl.
I gave it a whirl. The old guy in the office, first one on OpenAI, and I typed in OpenAI. I said, "What are the top 10 causes of death in the United States?" 1, heart disease. 2, cancer. 3, accidents, unintentional injuries. Unintentional injuries. So that could be a gun-related death as well. Chronic lower respiratory diseases, stroke, Alzheimer's disease, diabetes, influenza, pneumonia, kidney disease, suicide. That was 20. That's current. So COVID wasn't in there. It probably is built into the influenza. And so I thought about that for a second. I didn't see gun-related deaths as a specific topic. Could have been in the accidents and suicide. Murder wasn't in this list. So the murder ones is somewhere lower than that. So then I went back to my OpenAI and I said, well, that didn't give me, it gave me like in
so OpenAI, basically you ask a question. You can type in a question like who is Jesus of Nazareth? And it'll come out with like a dissertation on who he is. And so it's fantastic. Whereas on Google, hey, who is Jesus of Nazareth? You're going to get like a list of 10 websites
or more. Yeah.
And so it's a little different, but it gives you like a dissertation, and you can even ask it to present it at an 8th grade level.
Yeah. And most everything I've seen is it is close to an 8th grade level. Like what I just read you.
The USA Today is written to what, a 6th grade level?
Probably, yeah.
And so you can ask it to make it understandable for people like me.
Yeah. So when I read the data that was a high number, I was thinking, well, should I get anxious about this? Because I know 100% of us are going to die, but how is the question. And so I ask it, how do people die in the United States? So I gave you those top 10, but it didn't help put the 48,000 in perspective. So I said, how many people die from the top causes of death in the US? That was my follow-up question. So I got all those causes. And like number one, heart disease is 650,000 people a year are dying from heart disease, which is more than 10 times than gun-related deaths. The bottom one is suicide, 48,000, which is a horrible number, but was basically the same number as gun-related. So if you assume, and I didn't try to get deeper into it, that gun-related deaths are probably, a lot of them are going to be in suicide. A lot of them probably are going to be accidents, like some guy's out hunting and does something silly, but there's going to be a certain number of them are murders. And most of the time what the media hypes on are those murder events that happen, which is such a small subset of total deaths in the United States. You and I can have our emotions swayed by something the media produces, which is a horrible thing. I'm not underestimating that a gun-related death is not a big deal. I'm just saying it's not the big deal. Like if you wanted to make a change in the health of people, there's a lot of things on here that would do much more than focus on guns. So then I had one more question I had to ask, because I had a perception of what my answer would be. And I said, what cities are the highest gun-related deaths? And it couldn't answer that question specifically. It gave me the states.
Okay.
So the five highest gun-related deaths per 100,000.
Okay, can I just take a guess?
Yeah, so I'm giving you the hint. It's per
Man, I wish we
100,000.
could do a poll right now.
So this is per 100,000. Okay, so it's a neutralizer.
Okay. So I'm going to say Chicago or Illinois.
Okay.
I'm going to say California, New York. How many is it? Three? I'll say Missouri.
Okay.
And New Mexico.
New Mexico. He is 0 for 5. And the whole point of this exercise to you is to help you think like what we're doing behind the scenes isn't what we're feeling or perceiving. We're looking at data to help make decisions on your guys' behalf. And this was just a random data point I was looking at. 5 highest gun-related deaths per 100,000. 1, Mississippi. 2, Alabama. 3, Louisiana. 4, Arkansas. And number 5, West Virginia.
Now, what I know of some of those states is the percentage of gun ownership per capita is very high.
Right.
And so therefore, like the more you have, could that sway the numbers? Possibly.
Right. So if I were wanting to be an honest journalist about gun-related deaths, I would start in those 5 states and find out what is the problem going on there.
Yeah.
And it doesn't matter which side of the aisle you are politically, because if you're on one side or another, you might bring up Chicago or something. I don't know, but that's the objective data, not what we sense or think. And so I would encourage you not to let what you think or feel direct what you do in your decision grids.
That's
so
really good.
That's probably not the same data. You're looking at the CDC.
No, I was looking at CDC deaths last night. How excited on COVID? How exciting is that topic? But kind of like what Keith was sharing earlier is as I was looking at those numbers, I was thinking back to our COVID tracker that we would show. Did we show it every week? It seemed like
for a long time we did, probably a year.
Yeah, like we probably showed it like too long. Like we probably should have like quit using it. But nevertheless, those numbers have really been coming down, and that could be a combination of vaccines. That could be a combination of immune systems getting better. I don't know, but nevertheless, the trend is going down.
Yeah, but at the same time, my observation, and this isn't, I don't have data. My observation in talking to probably 200 or 250 people a month is there is a greater amount of sickness right now from the people I talked to than during any time during COVID. I've just seen a lot of people with different variations of the flu, COVID, colds. I can't remember that 3-letter thing the kids get.
RSV.
And the RSV has actually increased towards adults, which it historically hasn't. My opinion, this is just a Keith opinion, is that a lot of this is happening because people were locked down so long and their immune system wasn't exposed to those germs that normally
Yeah, well, you can
exposed
ask
to.
your open AI that question. Probably
Well, I just asked a couple doctors that question, and
the thing about the artificial intelligence, though, is you still have to think.
yeah,
Somebody's got to come up with the question.
right.
I mean, yes, you could have a database full of great replies and thoughts, but you still have to have the question. You still have to be curious. Curiosity being the number one thing in the workplace today is just staying curious.
Well, I am a curious soul, so and plus I had to show the young bucks around here I could figure this thing out before they did. So I had just
You got more time on your hands.
I'm a busy man. So where's my cursor? I want to share this screen with you. This doesn't pertain to probably most of our clients, but maybe it pertains to your kids, your grandkids. There's a thing called the 2022 Savers Credit. And basically, if you've got youngsters in your circle of influence that aren't making, we'll just look at the individuals. If they're not making more than 20,000 AGI, 20 to 22, all the way up to 34,000. If somebody's just getting started in their career and they're down in here, the money they put into their retirement plans, they're going to get some portion of that back through their tax return. And we've mentioned it, I think, in Gimbal newsletters, that you can transfer wealth, that money that you're maybe not going to use, if you transfer that to either children or grandchildren or other loved ones who may not be able to contribute to a Roth, the sooner they can get money into a Roth retirement account, the sooner that money begins compounding in a tax-free manner. And then if they can contribute it and they get qualified for that savers credit, it even gives them more money. So that's just an idea. If you're thinking about Christmas gifts, that you can jump on board of that. And then the next one,
Will the Tyner kids all unwrap that you're gonna print it off and give it to them?
no, those Tyner kids, they live a nice life. This data point I saw a couple weeks ago, and I want to bring it up because the disclaimer said 30% of holiday celebrators get injured somewhere or another, whether you're cutting your hand with wrapping presents or you're falling off the roof, putting the lights on or whatever. This data point, when I first looked at it, really made me concerned for others in a way that is kind of specific. And it's showing you three different lines here. The hours per week that people spend alone, they spend with friends, and they spend with companions. And the social, like you and me hanging out, that number has consistently dropped off with the advent of personal communication devices, cell phones, iPads, and things like that. And there's an old saying, it's not good for man to be alone. And so this ramp up is alarming, but there's, that you see that this it's on the uptrend. This they're maybe doing less. This hasn't bottomed, started turning down yet. But as you go into the holiday season, just keep in mind that this is a thing. Keep in mind those in your circle that maybe don't have anybody to be with, and maybe as you're going through your holidays, you can invest not your money, but some time, whether it's a phone call, a quick visit to some of those people that you think might possibly be alone. And I think that'll bring greater joy to their Christmas season and your own than probably all the gifts you can give to everybody.
Thanks for sharing that. That's good.
Yeah. What else we need to cover, Doug?
I plan on doing this next week.
That's what I was going to ask you. What do you think about the 23rd? I think we can do the 23rd.
Do the 23rd.
Yeah.
Might take the next week off, but I think we should do this the 23rd. Love to see you again.
Well, and if you have specific year-end questions you want to shoot out towards us for next week while we're here, our crowd might be a little thinner next week, but you can email us your specific question. We'd be happy to jump on those and offer you some insight on those. We'll leave your name out to protect the innocent, but we are thankful for you, and we trust you will have a great weekend this one.
Bye.